Hello, good morning and welcome. You've tuned into ET Now and you're watching Buy Now, Sell Now. I'm Varun Hirimat and along with me is Karunya Rao. Karunya, the markets this morning are slightly sulking. We have 28 of the 50 Nifty stocks declining. Of course, it's no clear trend visible today. If you look at the winners and losers, it's a mix across all your various sectors, whether they be financials or pharma. Heavyweights from each sector are definitely bleeding today. Just to give you a flavor though of what's happening within the indexes, the mid caps are definitely holding forth better than the lead benchmark Nifty. In terms of what's taking it on the chin, IT today is down nearly a whole percent. FMCG also cooling off and financial services are down. The PSU Bank index is the only area where I can really see a sharp uptake. That index is up 5%, and of course, these PSU banks are now rallying for the second day in a row. The media index is also doing quite well, up above 1%, but literally everything else in the market today is in the red. So broadly, I'd say the bears are slightly more in control this morning. But let's turn away from how the market's performing and take a look at what corporate earnings have done. And of course, corporate earnings are a lead indicator of economic recovery, and they do set the tone for what the markets can really do. So if you look at the Nifty scorecard up to date, where we stand at the end of the third quarter, it's quite an impressive outcome. You know, we have 27 of the 50 stocks above estimate. So that shows you that nearly 60% of the companies in the Nifty are doing better than people thought they would. Only 4 of them are below, so less than 10%. In line are 10. So, meeting expectations is around 20% of the Nifty index. So broadly, what you can conclude from this is it's been a much better earnings season than what brokerages were flagging off. And this is the second quarter in a row, mind you, that we've surprised on earnings. And over 64% of the Nifty earnings by weightage are strong. So that also gives you a feel of what's to come ahead. But Karunya, why don't you walk us through the stocks on your radar today?
Absolutely, lots of individual names to watch out for. Let's pull up the BNSN stock cloud then. First on the list is APL Apollo. There's some massive bulk deal action that has happened there. Small cap fund has bought close to 9 lakh shares in the company. On the flip side, a stock that's sulking away in trade is in Nestle. Q4 results failed to enthuse the markets. You have Airtel board meet today for discussing future strategic decisions and plans, and that's something that's keeping the stock in the limelight. You also have a TVS Sri Chakra, a stock that we don't address very often. They've signed an MOU with the government of Tamil Nadu in line with their 1,000 crore rupees investment program. Then you also have Mayur Uniquotors on the back of bulk deal action. Page Industries CEO has resigned yesterday. They informed the buses. Then you also have a Muthoot Finance, which is looking very resilient. They're looking to consider fundraising activity. IndusInd Bank on the back of warrant conversion news. And finally, you have a Gland Pharma, which is looking quite upbeat after Motilal has initiated the coverage on the stock. Let's touch base with Gaurang Shah and Kunal Bothra to take the conversation forward on markets. Kunal, hi, morning. What are your high and low risk bets for the day?
So good morning, Karunya. I think looking at the market texture, it now becomes a bit tricky to try and initiate high beta names. So I would look at 2 stocks. One of them is from the low beta pocket, and the stock which has off late done pretty well, especially I think this month, where the stock has done exceptionally well. That's Power Grid. Would suggest that as a buy call. The stock is in strong momentum. We've seen a very strong pickup of price and volume action yesterday, and I'm assuming, or rather, I'm sensing that the stock will probably see a follow-through price action on the upside as well. Today also, when the stock had opened a tad bit lower, it's trying to show signs of recovery. So I'm expecting Power Grid to be one of the top performing PSU stocks in the near term. Would suggest a buy with a target range approximately 236 to 240 range for Power Grid, and the stop loss could be kept at 218 mark. The second is a stock on a recommendation on PVR. The stock has been an underperformer as well. It's forming a bullish flag pattern on the daily chart. Interestingly, it's come back to a support level of 50-day moving average on the daily time frame, and I'm sensing that probably the risk reward in this stock is on the much favorable side from current levels. So looking at a reversal of sorts on stock like PVR, recommending a buy with a target of 1575 and stop us at 1450.
Okay, all right, Kunal. Thanks for that. Gaurang, what are the stocks on your radar?
Morning, Karanya. So, two investment ideas, low risk, fundamental ideas with a long term point of view. And these two investment ideas, Karanya, are basically on fallback of two or three important, you know, uh, evolution that we are going to see. First one is, of course, as you and Varun were mentioning a while back, third quarter earnings, and second one is the growth outlook by these companies' management for the future. And the third and the most important is whatever has been said by the government and the Honorable Finance Minister during the budget. So, first one is from the cap goods engineering space, KEC International, long-term targets of about 550. And the second one is on fallback of whatever spending that the government is likely to undertake to modernize the current infrastructure and create new infrastructure. So infrastructure is the second sector that we have identified, and over there we have reiterated a buy on PNC Infratech, and we have raised our targets to 340. Both these targets, Karanya, on KEC International and PNC Infratech, would get revised upwards in case if the future earnings are better than our estimates. But these are long-term, fundamental, low-risk investment ideas.
Thank you so much for sharing with us your picks. Both of you, request you both and our viewers to stay on. We're slipping into a break here. On the other side, we'll be addressing viewer queries. Stay tuned.
Hi, welcome back to Buy Now Sell Now here on ET Now. As India prepares the plan ahead of the crucial meet with the Cairn Energy CEO tomorrow, what could be the upcoming agenda in this meeting? My colleague Ruchi Bhatia is now with us. Hi Ruchi, thanks for joining in on BNSN. What are you picking up from your sources? What do you think is the primary agenda of this meet?
Well, important to note that Cairn Energy CEO Simon Thomas was set to meet Finance Ministry officials this week. Now, we're given to understand, given the fact that the Parliament is on, and also because India may look to appeal against the Cairn verdict, there is a possibility that Finance Minister Nirmala Sitharaman may skip this meeting, and in fact, Finance Secretary Ajay Bhushan Pandey may be leading the meeting. As I said, India is now preparing a plan ahead of its meeting with the Cairn Energy CEO, and is coming in the light of the $1.2 billion arbitration award as well. Given the fact that Cairn Energy is now looking to press India to get that award, and also they have reached out and they've threatened the overseas asset seizure as well. We're given to understand that high-level meetings are currently underway from last week to chalk out India's strategy on the Cairn arbitration award. We're given to understand that the Indian government, as I said, is likely to appeal against the ICJ's verdict by either end of February or early March. Important to note that this is, of course, coming in after India appealed against the Vodafone verdict of the ICJ as well. Having said that, top officials from Law Ministry, Revenue Department, Economic Affairs Department, as well as External Affairs Ministry are talking out in their strategy as to what needs to be done in light of these current developments, as Cairn, as I said, is threatening seizure of Indian overseas assets.
Okay, Ruchi, thanks much for joining us with that exclusive story. But let's shift gears back again to Buy Now, Sell Now. Kunal and Gaurang both are with us. Let's address some viewer queries then. First is an email from Rohit Mandare. He has bought 3,000 shares of Tata Motors at 114 rupees price point. He wants to know whether he should book profits or continue to hold. Kunal, you've been extremely bullish about Tata Motors over the last couple of months. Do you think there is more steam to this rally?
So, well, yes, Karuna, I am very bullish on Tata Motors and the prospects since last 7-8 months, from the time when the stock was at 105, 115 kind of a range. That's where given a big breakout and rather a big target range for stock like Tata Motors. I maintain that stance on the stock even at current levels. Now, it's rarely do you see that a stock which does pretty well for itself in a matter of 4-5 months goes into more of a corrective mode for a long period of time. Yes, those odd corrections, time corrections, and price corrections could happen, for stock like Tata Motors as well because of the steep run up in last 4-5 months. But then what this move does, it tends to set the trajectory higher for stocks from a longer term basis. So you bought at a very attractive price. So congratulations to you over here. And I would recommend that you should hold on to your investments on Tata Motors. And I would probably place in the next 1 or 2 years, so approximately an 18-month plus kind of a target range of more than 450 to 500 range for Tata Motors even from current levels. So I would advise a hold to the viewer who's holding it in from those 100 odd levels.
Okay, thanks for that, Kunal. Gaurang, how about you? Tata Motors, has it run up too much, or do you think there's still a lot of value left on the table?
This was the most unacceptable stroke hated stock in the auto pack when we had the Brexit. Then we had the slowdown in terms of their overseas business high-end segment JLR, that is Jaguar Land Rover. Then we had the China slowdown impacting this JLR business, UK Brexit impacting this particular business, and of course, there was an overall overhang on the auto sector. So from being the underdog to being an outperformer in the last couple of months, and as a disclosure, Varun, we've been maintaining a positive stance for a pretty long time on Tata Motors. We continue to maintain that, and just yesterday, if I'm not mistaken, we had the news that Tata Motors is planning to introduce electric vehicle variants for these top-end luxury models in the GLR segment. My advice to this investor is that he's got 3,000 shares at 114. Stock is trading at somewhere close to about 329, 330. You have more than doubled your money. My advice, though we remain positive on Tata Motors from a long-term point of view, purely because he's making super phenomenal profits, my advice would be that take at least 30% or maybe 40% off the table. By this, you will bring down your cost to zero of the balance 50 to 60% that you will continue to hold on, and that will put you in a very comfortable zone. And whatever you decide to sell off, in case if you do accept my advice, then diversify into some other sectors which will give you a great opportunity, and that will also create a very strong portfolio. But maintain a positive stance on Tata Motors. Purely given the profits that this gentleman is making, my advice is to take at least some money off the table.
Okay, all right, thanks for that. So Tata Motors, some profit booking, perhaps advisable. Let's move on then. DLF, next stock in focus. Biju Jacob has written to us, and 500 shares of DLF have been purchased at 236 rupees per share. Should I sell at 320 and book my 36% profit, is his question. So Kunal, coming to you first. DLF has obviously done well of late. Do you sense that profit booking might be the wise decision right now, or sit tight?
See, I think it's going to be a two-way strategy over here. One, frankly, because a stock like DLF tends to do pretty well when there is a completely risk-on mode for the markets and what we are currently going through. So we are going through a completely strong risk-on mode. So it's bound to be that these high beta stocks and the rate sensitives, etc., they're the ones which tend to do pretty well. So which is why I think stocks like DLF have picked up pace in the last 3-4 months. Technically, there has been a big breakout above the 270, 272 mark for DLF when it broke past about that level, I think, if I'm not wrong, previous month. So now that becomes more of a floor or a support for the stock price. So I mean, just looking at the plain charts, I would expect DLF to do pretty well for itself till the time the stock holds above that 270, 272 breakout point. So you may have a touch and go or a retest of that neckline, but ideally when you see such a strong 10-year prolonged breakout for a stock like DLF, which is also a high beta stock, it goes into a multi-quarter, multi-year upside. So my advice would be a hold on DLF, and especially keeping that 270, 272 as a support level or a stop loss level for your trade.
Okay. Gaurang, what is your assessment of DLF's fundamentals?
Currently, as a sector, I think real estate sector is likely to do phenomenally well, and we've also seen strong fundamental stocks in the real estate sector give you a very outstanding performance. Having said that, the news flows on DLF tends to send the stock in a volatile trajectory. Though we remain positive on DLF, the only worry is that how soon the company is able to reduce the debt on the balance sheet, on which the management has given different verbatim whenever they have come on post their earnings and given kind of outlook on their business. He's making 35% plus kind of profit. Here again, I would advise at least book some part profits and stay invested in balance.
Okay. All right then, moving on to our next email query. This is from Nitin Hinge. He wants to dip into or buy into rather IRCTC and wants to know how the charts are looking like and how the fundamentals are looking like over the next 1 year. Kunal, what is your view on IRCTC? How's the chart looking?
Well, it looks very attractive, Karnya. So it's one of the few stocks which, has even though it has a limited history of approximately 1.5 year, but then from whatever the stock has shown, there has been a prolonged period of consolidation. So if you look at from I think May or June 2020 till December or January 2021, from that period, from the last 6-7 months, the stock had been absolutely sideways, just about meandering at that 1400 level, 1400 to 1450 range was approximately the range for IRCTC. But this month it seems that the stock has broken past about that range. It's now at 1700 plus level. So it seems that it's trying to end this prolonged consolidation and trying to channel its way back higher on the upside. The all-time high for IRCTC, if I'm not wrong, was closer to 1990, 1995 range. And I believe that with this move, which you've seen this month for the stock, it should try and at least retest that high or cross beyond that. So even as a shorter-term play, I believe at least a 200 to 250 point on the upside could be a possible target for IRCTC. So would recommend that as a buy.
Okay, thanks for that, Kunal. Gaurang, how about you? Of course, this stock has gone quiet for a while given everything that happened during lockdown. But I mean, it is a monopolized booking platform for Indian Railways, which obviously, long-term prospects should be very good. So what do you think? Can one enter now? Would you wait for a bit? What's your view here?
I have failed miserably. And I always advise that, if you want to start getting invested in at current levels, you should always be, disciplined. And financial discipline is something that you should never forget when it comes to investing into equity market. So with that perspective and as a disclosure, we had a positive coverage during the IPO. We had given a subscribe for IRCTC. And post that, we have a standalone long-term buy fundamental call on IRCTC. And this company not only caters to booking tickets platform, but it has also various other businesses. And one of them is running private trains like Tejas Express. And if I'm not mistaken, March onwards, you will have Tejas Express back and running. And there's likely possibility that as the schedules of long distance train come back to pre-COVID levels, this company is likely to benefit to a great extent. Even catering in railways, in trains, have started, I think, about a fortnight or back or something like that. And this is where this particular company plays an important role. So start getting invested at current levels and don't put all your money at one time. A gradual addition on dips would be a more appropriate way to get invested into IRCTC.
Okay, thanks for that. Let's move on then. Our viewer Nitin Hinge, I presume, has written to us, and what are the levels to expect for SBI cards in 2021 is his question. So Kunal, on the chart, what kind of levels can you foresee for this stock?
In chart, SBI cards done pretty well for itself in last 7-8 months. Even the last 2 months, I think if I'm not wrong, previous month the stock was up some 200 to 50 odd points, and prior to that as well in the month of December as well, the stock had shown some good spurt of almost 10% rise. So it's a stock which is now, it seems to be in a good set of momentum. Now, where you're into such a kind of a name where the stock is into high momentum, and it's traditionally not a high beta, stock as well. You look at the prospects and look at the relative strength of the stock as well, as compared to many of the market-related stocks. It doesn't come out as a stock which is extremely high beta. So I think that's the better part for a stock like SBI Cards. Now, in terms of levels, I believe in the previous high or the swing high for SBI Cards is approximately 1050, 1075 levels. So I think that could probably be taken out over the next few weeks. I think a near-term target which I would probably place on the stock would be approximately 1150 to 1200 range for the stock. So would suggest if the viewers already bought the stock and assumingly he's holding on to it, then I would suggest a hold, and we'll probably aim for targets of approximately 1150 to 1200 levels on SBI Cards.
All right, Gaurang, your view on SBI Cards, given that now consumption, especially even for discretionary spends, is coming back.
So Karanya, first of all, this is a one-of-a-kind of business. I don't recollect that there is a peer comparison available for SBI Cards up until now. And over here again, Karanya, we had been positive during the IPO. We had a subscribe from a long-term point of view. And as the new normal sets in and people get used to more of plastic money, I think businesses for companies like SBI Cards is only going to go stronger. And more so, Karanya, the penetration into semi-urban and rural India is turning out to be very strong. My view again over here would be that it's a great company to get invested in. But don't put all your money at one time. Start at current levels and add on dips.
Okay, all right then. Thank you so much, both of you gentlemen, for joining us this morning and helping our viewers out. Always a pleasure chatting with you both. Slipping into a break here, more updates and insights lined up. When we come back, stay tuned.
Hi, welcome back to ET Now. You're watching Buy Now, Sell Now. Of course, IndusInd Bank is very much in focus today. If you look at the price action on the stock, it might not suggest that there's been a major positive development, and that's because there's two sides to the story. First side is that tomorrow is the last day for warrant subscription conversion for the promoter entity, right? So IIHL has conducted a rights issue, which is a promoter entity. They have raised money at a 1400% premium, and that money, 2,000 crore, is supposed to flow into IndusInd Bank today or tomorrow at a price of 1709 rupees per share. Now that's the kicker here. The warrant conversion price is significantly higher, in fact 60% higher than the current market price. So that was a trigger for re-rating on the stock, which a lot of brokerages were also flagging off, that it might lead to a further re-rating in IndusInd Bank. However, what's happened is there's also been a pledge created to service part of this. So the company is IIHL will be hiking stake in IndusInd to the tune of 1.7% with this warrant conversion. That will take their total holding to 15% on a post-diluted basis. So all this, however, is going to be financed by a pledge. So the market might not be too keen on that side of things, but nonetheless, if this money comes in at the price mentioned of 1700 rupees, it should be a huge vote of confidence that the promoters really believe in what's happening at the bank. So just keep your eyes out on this counter today. It could go either way depending on market action, and of course it's still being digested by the street, and we'll be bringing you some brokerage views on that later as well. But speaking of brokerage views, Karunya, JP Morgan has a view on Nestle. Would you like to walk us through what they're saying?
That's right. In fact, it doesn't seem like a good news at all at this juncture. JP Morgan, following Nestle's Q4 report card, has actually decided to downgrade the stock from overweight to neutral. The target that they've given right now for Nestle is 17,700 rupees per share. It has been an unexciting Q4 according to them. They've downgraded to neutral on balanced risk reward. They expect healthy revenue growth though going forward as well. So the momentum according to them is likely to sustain, and they've at the same time also lowered the margin expectations going forward. The stock, as we all know, continues to trade weak, but even the street and investment brokerages are not digesting it too well at this juncture. Varun, back to you for an update regarding Adani Ports' new acquisition.
Yeah, Karunya. Well, whether the markets are lackluster or not, this stock is at 52-week high. The 52-week high is 670, 660 rupees today for an Adani Ports. And of course, it's been a one-way journey for most of the recent past. Another positive development today is if there aren't enough catalysts over here, we've completed the acquisition of the Digi port for 705 crores. And they're now going to be spending 10,000 crores over the next, few years to develop Digi into a multi-cargo port, right? And this will, of course, give them access to a second major port apart from the ones which they're currently already operating. So market seems to be receiving this piece of information very well today. The stock is up in trade. And of course, it's got a critical placement, this port. So it should lead to a lot of strategic value and synergies for Adani Port. So keep your eyes out on this stock today as well. Fairly buoyant in trade and seeing some good volumes also. So that's Adani, but let's switch gears towards the IT space a little bit because Tech Mahindra has announced a cloud collaboration with IBM. And of course, that's going to lead to, a whole lot of capabilities for the company in cloud, which is obviously a key focal point for any tech company today. But my colleague Poonam has taken a deep dive into exactly what this is going to mean for shareholders. Let's cut across to her.
Well, IBM and Tech Mahindra have collaborated to create a $1 billion ecosystem over the next 3 years. They would be tapping opportunity in 5G, hybrid cloud, automation and cybersecurity. In fact, the partnership is likely to strengthen in order to pursue the $1 trillion hybrid cloud market opportunity. And according to IBM Chairman and CEO, it is likely to bring in $1 billion worth of revenue for IBM as well as Tech Mahindra each. In fact, IBM Chairman and CEO believes that about 40% of the revenue would be driven by telco and 5G powered by hybrid cloud, and while 60% would be driven by other industries. He also believes that the hybrid cloud opportunity would be over $1 trillion for the industry. Artificial intelligence would unlock anywhere between $14 to $16 trillion of global productivity. So yes, it is a very important partnership of Tech Mahindra with IBM, and we should be seeing good amount of revenues coming in from this partnership over the next 3 years. If we actually calculate, then just last quarter itself, Tech Mahindra did clock in revenues of slightly over $1 billion just in the third quarter itself. So yes, from that perspective, this means that nearly around $300 odd million would be added on a yearly basis to Tech Mahindra's revenue.
Thanks, Poonam, for that. The earnings season is almost, over now. Nifty earnings verdict is out. Let's take it across to Jayesh for an analysis of how Q3 of FY21 panned out.
With all the Nifty 50 companies having reported their third quarterly earnings, let's have a look at how the EPS picture looks like for the Nifty. And it's quite encouraging, I must say, because at the start of the quarter, we were expecting about 127.5 rupees for the EPS, which was revised upwards to about 131 towards the end of the quarter. However, the current estimate, which is as of yesterday, stood at 155.5 rupees, and what was even enthusing was the fact that the Nifty managed to beat that also with an EPS of 164.4 rupees. Now that's the highest ever quarterly EPS that the Nifty has clocked for itself, and this is the second straight quarter that the Nifty EPS has beaten the street expectations. It's the third quarter of the Nifty posting double-digit quarter-on-quarter gains for its EPS as well. As far as the scorecard is concerned, that also looks very encouraging. More than half of the companies have reported above set of numbers, while you have 10 companies that reported in line, and you had 9 and 4 each for mixed as well as below. Also, if you have a look at the valuation picture going forward, on an FY21 basis, the anticipated EPS is about 528, which means that, for the fourth quarter, we will have to deliver about 156 rupees, which is not too far-fetched. That will give us a valuation of 29 times. On an FY22 basis, analysts are expecting 705 rupees. That translates into 22 times. And for FY23, it is pegged at 830 rupees EPS, which will give us a valuation of 18.5 times.
Right, thanks for that, Jayesh. Of course, very interesting what's winding up with the earnings of various companies. But let's switch gears to one of them, and innovation has been a very key change during the pandemic for Dollar Industries, and we caught up with the MD Vinod Kumar to understand really how the revamp is panning out for the company and how the digital initiatives are really paying off. Let's listen in.
Us about innovation, because during the lockdown and after lockdown, there are several consumer facing companies that are now looking at innovating their products, the way they sell, what they sell, how they sell it. So what are the product led innovations that are taking place at Dollar Industries, and any other initiatives that you're perhaps undertaking to expand your penetration?
If you talk of innovation, I'm just want to highlight a situation like we have gone into a brand architecture. That particular brand architecture was planned sometimes January 2019. And it is a known fact that the brand architecture always takes more than a year. When you really come with the new logo design and the entire product range being synchronized to form a brand architecture. We plan to come up with this brand architecture sometimes February, March 2020. But then because of the pandemic situation, we could not do that in a physical mode because of the various state government restrictions. And we had also, it is a known fact, I mean, everybody knows that our brand ambassador is Akshay Kumar. And entire scene was planned, but then suddenly Maharashtra government came out with certain protocol where more than 30-40 persons cannot be placed at a single spot. So ultimately we could not do that brand launching and launching of brand architecture before the consumers and the retailers and our dealer distributors in a physical mode. So ultimately then once the lockdown was away. I mean, after 45 days of complete lockdown was passed. Then and the government came out with certain relaxations. So then we had no choice but to go digital about presenting the new logo and the brand architecture before the consumers, before our esteemed retailers and the dealer distributors. So we had a complete. We went on for digital platform to really come before the market with a new brand logo design and the brand architecture.
Welcome back. You're still watching Buy Now, Sell Now. Time to unveil our daily quiz answer. We asked you this morning, which of these retailers has shown highest sequential improvement in revenue growth in the quarter gone by? That's Q3 of FY21. Options were V-Mart, Trent, ABFRL and Avenue Supermarts. The correct answer to the question is option A, that's V-Mart. We have 3 quiz champions who got the correct answer well ahead of the others. There's Himanshu Kumar, Pranav Kulshrestha and Rekha Menon. Congratulations to all 3 of you, and thanks for everybody else for participating in the quiz as well.
Okay, thanks for that, Karanya. There's an all-important development that we need to bring to your attention, a SEBI board meeting, and it seems that they want to continue their pro stance on the markets. So they may be looking at easing the norms for IPO listing. They may be looking at some tweaking as well for the shareholder norms, and various other items are on the agenda. My colleague Utkarsh is going to now give us a sense of what we might expect. Hi Utkarsh, what are you picking up from your sources?
So SEBI board meeting today, what's on the agenda? Now the first one is that Nirmala Sitharaman, the finance minister, will be meeting the SEBI board. This happens after budget every time. That's the first RBI board meeting, the first SEBI board meeting. FM meets the board members and tells them about the announcements in the budget and how in some announcements SEBI and RBI will also have to make some changes. Like in this case, gold spot exchange regulations will be discussed in the meeting itself. But is that the biggest thing on the agenda? No. What's the biggest thing on the agenda is the easing norms for IPO listing. What we've been told by our sources is that SEBI might look to ease listing norms for IPOs and it might allow a smaller float for larger issues. Now what our sources have told us is that currently companies above 4,000 crores have to do a 10% dilution. That can be brought down. Now in the meeting today, formulas will be discussed of how to bring that down. Not only this, what also is on the agenda is a change in minimum public shareholding requirement. Now at this point of time, what happens is that you have to get the shareholding to a minimum 25% within 3 years of listing. That can be moved to 5 years for companies which have a market cap or a valuation more than 1 lakh crore rupees. This is something which can also be discussed in the SEBI board meeting. Apart from that, stricter actions and stricter regulations from independent directors. SEBI has been getting a lot of complaints with regards to corporate governance and the fact that independent directors are only dummy directors. They do not really participate and are also not accountable for many things. So there can be changes there as well. So 3 major things on the agenda, apart from the fact that the finance minister herself will be present in the meeting and will be speaking about the economy and the other changes which has to be brought in SEBI and RBI post the budget announcements.
Thanks, Utkarsh, for that. Let's wrap it up right here on the show. We're out of time, so thank you so much for watching.